Hello guys, this is Shoaib Yaqub. In this video, I'm going to discuss few MCQs or MTQs from March-June 2022 attempt. So I have taken this data from the March-June 2022 examiner report. The number one question is, company is a listed company which has 800 million ordinary shares in issue. Yesterday, the ordinary share price closed at $6. 2 days earlier, so the reset price is $6. 2 days earlier, the board of directors approved the launch of two new innovative products, but this has not yet been published. So before 2 days, today's price, yesterday's price $6, and 2 days earlier, company has approved the launch of two new products. Product A has NPV of 40 million. Decision to launch product A will be announced publicly tomorrow. Product B has NPV of 160 million. The decision to launch product B will be announced publicly this morning, today's morning. Assume all other things are equal and the capital market believe that projected NPV, both product will be financed using internally generated funds. What will be the ordinary share price? We are at the end of the today, if the capital market is semi-strong and strong form efficient. Remember one thing. Yesterday, this is yesterday, price was $6. 2 days earlier, company has decided to launch two new product. So that means in strong efficient market, this news will already part of the price, because 2 days earlier company has decided to launch the new project. As soon as company decides to launch the new project in strong efficient market, this news will become part of the share price. So in strong efficient market, price will be $6. And what about the semi-strong market? This $6 was the yesterday price, and this morning only one project will be announced, not the second one. This will be announced tomorrow, so its impact will not be part of the price in semi-strong market, because in semi-strong market only those project or only those news will be part of the price that have been announced. Unannounced project, unannounced NPV will not become part of the price. So only 160 million will be announced and its impact will be 160 million over 800 million. Its impact will be $0.2. So the price will move from $6 to $6.2. So in strong form efficient market, price will not reflect anything, because price has already been reflected this news. Why? Because this is the price of yesterday and company has decided to launch the project 2 days earlier. So the impact of the 2 days earlier project decision will be part of this $6. Although this has not been announced, but in a strong form market, this is not the case. Even if the project is not announced, its decision will become part of the price. Okay. And what about in semi-strong market? In semi-strong market, only that project, only that NPV, only that news will be part of the price that has been announced. So in today's morning, only project B has been announced. So that's why its impact will be part of the price. That is 160 million is the total NPV. For 800 million shares, its impact will be $0.2. So price will move from $6 to $6.2. That was the first MCQ. Second is, which of the following statement about an over-the-counter interest rate option are correct? It is an agreement with a financial institution. Obviously, over-the-counter is an agreement with a financial institution. It can be traded. No, over-the-counter will not be traded. It's a private contract. And immediate premium is payable. Yes, immediate premium is payable, because in case of option, you have to pay the immediate premium. It must be exercised. No, option will only be exercised if it gives you the favorable position. Otherwise, you will lapse the option. So 1 and 3 are the answer. Which four of the following description relate to the main macroeconomic policy objective? Okay, number one is ensuring minimum amount of price increases. So that is the stable inflation. That is the part of the macroeconomic policy objective. Increasing national income and living standard. That is a part of macroeconomic policy. Ensuring a balanced ratio of import to export. Maintaining trade balance is the macroeconomic policy. Maintaining interest rate at a minimum level. Maintaining interest rate level is actually the monetary policy. Balancing government spending with tax rates is actually the fiscal policy. This is fiscal policy. This is monetary policy. Ensuring a stable and fully employed labor force is the macroeconomic policy. So we can say that A, B, C, and F are the answers. Question number 4. B company has 100 billion equity shares in issue, has just reported a profit after tax of 55 million. A new issue of 50 million shares at a price of $1.5 is being considered. So you will raise funds, that is 50 into 1.5, $75 million. All proceeds should be used to redeem a bank loan with an annual interest of 8%. So you will pay back the loan and saving will be 75 million into 8%. And obviously, whenever you will save the interest, its impact calculates after tax impact, that will be 75 into 0.08 into 0.8. So you will save $4.8 million. Your previous earning was 55. If the equity issues go ahead and the bank loan is redeemed, what will be the new EPS? So the previous earning was 55 plus 4.8. Previous year was 100 million. New shares are 50 million. So if you calculate 59.4 divided by 150, that is 0.3. 39.399 is the answer. Section B. This is the example of section B, working capital. A company is a multinational company which has been reviewing its working capital management. Component X is given, its unit price is given, trade payable are given. Company has received an offer of a discount for bulk purchase from B company, one of its supplier. Company has offered 0.5% discount on order of 60,000 units or more. Currently, company consumes 240,000 units annually and places order of 20. This is the current reorder level. Current reorder quantity 20,000. Current reorder quantity. At the end of each month, holding cost for component X is $1 and ordering cost is $250. Company does not maintain any buffer stock. Colleagues company, a major supplier of component M to MX company, is offered a 1% early settlement discount for payment within 30 days. Company currently takes 70 days to settle the invoices. Company has a cost of short-term financing 6% and 360 days in a year. So the first question is, okay, last line. Company MX company currently has decentralized treasury, but is considering implementing a centralized treasury. So you're moving from decentralization to centralization. Decentralization means you will do the functions, you will make the decision at centers at divisional level. Centralized treasury means you will do the decision, you will take the decision, you will arrange all things at a central level. You will manage all the divisions at one office, that is head office. Using month as a basis, what is the financial consequence of accepting the bulk purchase discount? So current, this is current policy. This is proposed policy. So currently ordering cost is you are placing number of orders 240,000 divided by 20,000. So 12 are the number of orders into 250. So 3000 is the ordering cost. Holding cost is ordering quantity 20,000 divided by 2 into 1, that is 10,000. So, and purchase cost is 240,000 are the annual demand into 25, that is equal to 240,000 into 25, that is equal to 6 million. Okay, now next order quantity will be 60,000. So number of order will be 4. So it will be 1,000. Then 60,000 divided by 2 into 1, that is equal to 30,000. And there will be a discount of 0.5%. So 6 million into 0.995. So that is equal to 5.97 million. 5.97 million. So if you take the sum of these two, that will be equal to this will be 60.01 million, 6.001 million, and this will be 6.013 million. And when you take the difference of these two, is the 12,000 savings, a benefit of 12,000 per year. So this is the benefit of 12,000. Using days as a basis, what is the financial consequence of accepting the early settlement discount? Okay, the information about the collects is given, only one information, that is 3.2 million is the payable. So if you are currently taking 72 days for the payment, so this payable is for 72 days. So if 72 days payable is available, you can calculate the annual purchases. Annual purchases 3.2 million. I'm taking 000 as a round off figure. 3.2 million is a payable of 72 days. 3.2 million is the payable of 72 days. So what are the payable of 360 days? So 3.2 million divided by 72 into 360. So annual purchases are 16,000. So this is current policy. This is proposed policy. Currently you are taking 72 days for payment. So if you are delaying the payment, that means you are saving the interest. So benefit of delaying payment. So you are paying within 72 days. So that means you will be saving 6% on that. So you are saving 192. And if you are paying within a month, within 30 days, so how much you will save? 16,000 into 30 divided by 360 into 0.06. So you will only save 80. How much you will save further? The discount receipt. You will receive a discount. That is 16,000 into 1%. 160. So the total you will save is 240. Here total you will save 192. So what is the increase in saving? 240 minus 192. 48,000. Benefit of 48,000. That's you will get. Next is in relation to managing foreign account receivable, which of the following statement is correct? Company expecting to receive foreign currency from foreign account receivable will be concerned about the risk of foreign currency appreciating against the domestic currency. So that means if foreign currency is appreciating, home currency will depreciate. Remember, exporter will get benefit if home currency depreciates. So this will not be their concern. Exporter will get benefit, home currency appreciates. If home currency depreciates and the foreign currency appreciates. So this is not the answer. The safest way to conduct business and foreign account receivable is by making a sales where goods are shipped and delivered before payment is due. That is a risk, because you will ship the goods and you will receive payment after that. That will create a risk. There is no need to assess the creditworthiness of foreign customer. Why? There is always a need. It's not a correct answer. Discounting bill of exchange can reduce foreign account receivable default risk, because when you do the discounting, it will reduce your exposure to receivable. When your receivables are lower, it will reduce your risk. What is discounting? Discounting is you will sell your receivable to the other party. Obviously, when you sell your receivable to the other party, it will convert into cash. And when you have a cash in balance sheet, it will reduce your risk. That's the answer. Next is in relation to the Amex company proposed change to treasury management operation, which of the following statement is correct? So Amex was saying that company should shift from decentralization to the centralization. Number one is local management will be incentivized to maximize profitability. No, because you are taking their decision ability. You are shifting the decision from local to the central treasury. So that's not the answer. Amex company will be more responsive to localized need. When you do the centralized treasury, when you take the decision at center, it will not address the local needs. MS company will suffer a loss of autonomy at a local level. Yes, loss of autonomy will be there. Now, central will be more autonomous compared to the local divisions. The change should increase the cost of hedging foreign exchange risk. No. When you take the decision at center, it will normally reduce the cost. So C is the answer. In relation to the working capital funding strategy, funding means how you will finance the working capital. Working capital includes current assets and current liability. How you will finance the current assets? Remember, we have covered this: non-current asset, permanent current asset, fluctuating current asset. If you finance majority of the portion with overdraft, that is aggressive policy. If you finance majority of the portion with long-term finance, that is conservative policy. So an aggressive strategy seeks to maximize liquidity at the expense of profitability. No. Short-term finance has a higher cost than long-term finance. No. Fluctuating current asset should be financed from a short-term finance. Fluctuating current asset, fluctuating a temporary current asset, that should be financed with a short-term source. That's the correct answer. C is the correct answer. C is the correct answer. A moderate or matching strategy finances current asset from a short-term course. No. Actually, non-matching, what matching policy will do? Non-current assets are long-term. Permanent current assets are long-term. These should be financed with long-term source. Only temporary current assets should be financed with short-term source. So that's the matching policy. So C is the answer.